Yay!
We're back again. Welcome back to another episode of Home Buying Tips in New Zealand, or the New Zealand First Home Buyers Guide and Insight.
Guys,
And it's great to have you all here tonight for a special milestone episode 51. I'm Julie, and as always, I'm joined by my amazing co-host, sometimes on the spot, Chikahan, Mary Ann.
Hey everyone! Yes, Ate, this is indeed a milestone. And what's very, very funny is that I'm actually really looking forward to this episode because he's gonna be a milestone as well. But it
Oh,
just feels just like yesterday. Time flies when you're actually enjoying and helping people in their home buying journey. So tonight, as I've said, as I've mentioned, we have a very exciting episode lined up for you. So we're diving into something that's on a lot of first home buyers' mind. Actually, there's a lot of changes at it. So I know that there is the I've heard from my one of my well actually my favorite person to always tell people to go into if they're applying for the loan,
yeah.
But yes, so this one is actually, I think I've heard about the developers, but I think we get to know more once he's in. Right, Ate?
That's right. And we are thrilled to welcome back, of course, our regular guest, Sanjeev Jangra, a trusted advisor from Loan Market. I wonder how long has he been working there for? That would be interesting.
Oh, you
Sanjeev
can yeah.
helping Kiwis and immigrants like Filipinos, like us, of course, navigate the complexities of real estate financing because it's not easy. And like in the Philippines, you just contact one person, but here in New Zealand, you have
Yes.
to contact the experts. First and foremost, of
Yes.
course, mortgage broker. And tonight, he's bringing us some fresh updates. There's a lot of changes, as what Marianne has mentioned on what's happening with home loans, particularly what developers are offering. And I'm experiencing that as well as I've mentioned that last week, I think.
Yes.
Yeah, about
Yeah, I think
the
you asked me about the why he
Kiwiana.
cannot
Kiwiana.
yeah, something
Oh,
like
no,
that.
sorry.
Yes.
I got mixed up with the term. It's Wirihana.
Yes, Rihanna.
Okay. But maybe Sanjeev has some ideas about this one too. Let's find out later. But Marianne, the property market has seen some changes in the past, and I've been keeping an eye on it because we are renewing a third of our mortgage. So we're
Uh-huh.
trying to, how do you say it, work smart or get a better deal. So it's best
Yes.
you know what's going on the market. That's why we keep this going because and now according to the latest statistics, oh, is that even real, house prices are becoming stable, I would say. It's not coming down even though the mortgage uh,
The
interest rate,
OCR and rates, yes, is
yeah,
going down, yes.
starting with the OCR and so many other things. I think I just want to mention this now that we have Sanjeev since we started last year, I reckon,
I
starting
know.
with episode 5, right? Episode
I
5.
think
I
he is
went back to
actually
our
our very
videos.
first guest, Ate. Is he
Sorry?
is, is he our very first guest? I think so, eh? So that's why he's
Yeah. Yeah.
gonna
Yes,
be
you're
here
right.
for for our live podcast and also for our YouTube that they can every time go back to the episodes that we have.
So for those who missed those episodes, because we are already on the 51st episode now. And when we started, we have the episode, fifth episode. Sorry, I got mixed up with my words. His first he
Guesting.
joined us on episode 5, get free advice from a mortgage broker. And we keep on reiterating that when you tap a mortgage broker, it's actually a free appointment with them, so it's a no-brainer. Why would you have a second
Mm.
thought of tapping different mortgage broker until you land on somebody who you feel like, hey, they know a lot of things? Yeah, go ahead. I've spoken to many mortgage brokers actually, and of course he joined us as well on the 14th episode 14, where he taught us about the how to navigate the changes with the many insights that he has, because obviously he's probably a
and
decade already. Yeah,
and I
and
think that's the reason why he's one of our favorite guests in here because he's always giving us the time, his free time, giving his
Yeah.
professional advice as well, not just for you and me ate, but everyone that's watching us, and as what you've said earlier, the market is stabilizing. And I know that right
I'm not
now,
100%.
especially to immigrant, kind of, but a lot of immigrants are looking into buying, of course, the new builds. And I think Sanjeev has a very, very important news, good news actually, to share it with us, especially when it comes to purchasing your first home as and the new builds. So yeah, Ate, why don't you?
Because I just would like to mention this again. We have a couple of viewers already that I believe are interested into home buying, but I would like to encourage you guys to go and check the other episodes that he joined us, episode 33, where he talked about the home grants and updates on the DTI and LVR. So if you don't have any ideas about these words, check that episode, because when I was having my journey, home buying journey, it was really tricky. So it's good that we have this episode. Go back to it if you want to know more. And the latest one that he joined us was an episode 44. I'm mentioning this so that when you go to my playlist, you just click on those episodes that I'm mentioning.
Episodes.
Understanding the official cash rate is also very important, because it gives you an idea whether you're going to lock in your mortgage interest rate into how many years. You've got to study the market, the property market, and to do that, let's have our one and only, and very generous with his time and with his ideas. Let's welcome Sanjeev. Hello, hello, hello. There you go.
Hey guys,
Hi,
how you doing?
Sanjeev.
Hello,
How are
hello. How you doing?
you? Thank you for joining us tonight. I know that we actually really busy, but yes, thank you.
It's always a
How are
pleasure.
you?
Very good, very good. Full on busy. As you know, the rates are coming down. A lot of people want to buy houses, and we're doing a lot of refinances, etc. as well. The interest rates coming down. People just want to take advantage of those lower rates. So, yeah, pretty full on.
Now, we've been mentioning already before we introduced you again that the official cash rate has gone down again just last week, right? Now it's 4.75, 0.50 basis. They keep on saying that on the the news, and I assume that's just from 5.25, I think, last year. Now it's
Yes.
down to 4.75. What's the impact of this official cash rate? Now the banks are competing with each other, offering lower rates. But yeah, what do you think, the how is the market going now? Are there more houses being sold, or are there more buyers looking into buying houses?
Yes, a lot more sales are happening now because obviously the interest rates are coming down. To give you an example, ANZ dropped their 1 year rate down to 5.59% recently. Other banks are sort of matching it, but yeah, they're almost there. Um, to give you an idea, let's say you borrowed $1 million from the bank at the beginning of the year versus today.
Mhm,
So
mhm.
if you go back January, February, you were paying around 7.29 for 1 year, right? So that has come down to 5.59. If your mortgage was at $1 million, there's about $17,000 a year in interest cost difference, right? Or about over $1,400 a month that will now stay in your pocket rather than going to the bank. Now you imagine what people are going to do with that extra $1,400 a month. They're going to spend it.
Yeah.
Or
That's a big amount.
yeah,
Yeah.
or they don't have to work as hard, right? So you don't have to do extra shifts every week. So that's the relief for existing mortgage holders and also for the newbies as well. So the ones who are looking to buy their first home, the repayments are much more affordable now compared to what they were, say, 6, 7 months ago. And it's only going to go cheaper from here because we are expecting another cut in at end of November. So it'll be another 0.5% cut most probably. So that will bring your 1 year rate down to somewhere close to 5.2-ish%. And we're back in the game then.
I just want to quickly share our decision recently with ANZ, because a third of our mortgage is due for renewal this end of the month. And then just before the official cash rate gone down to 4.75, they already offered us this, not the standard rate, the special rate, which is 5.59, the one that you've mentioned. But
Yes.
then it's just for 1 year. And my husband and I thought, no, we'll just go for 5.69, the previous one that they've offered us, which is good for 2 years. And so we thought it might go up again next time. So we'd rather lock it up for 2 years. What do you think of our decision? Just, we're happy to accept
Look,
it.
that's your personal call. Obviously, I don't know much about that, but I don't think the rates will go up any further. So the rates will only be down. So this time around, next year, you'll be below 5%. Okay, so in a year's
Ooh.
time, you will be probably be below 5% because the way the economy is doing at the moment, Reserve Bank's got no other options other than reducing the rates. So they will continue cutting the rates, and then you'll see a big jump in property values as well in the next 12
Oh,
months.
yes. So the property values will have to go up then. I am still happy because the other third of our mortgage is due in April next year. So we'll be like, oh, if it's four, then we'll be happy.
Yeah, because if there was a huge difference between 1 year and 2 year, then I would go for 2 year. But because it's pretty much similar, I don't want to take a chance personally. But again, it's not a financial advice. Everyone's different. So some
Yeah,
people
yeah.
a 2 or 3 year rate will suit more. For others, maybe 6 months or leave it on floating.
Mm.
Just depends on the scenario. But most of our clients at the moment only going for 1 year because there's a huge. I mean, if there was not much gap between 6 months and 1 year, I would fix everyone for just 6 months. I wouldn't go more than that. But 1 year is pretty good too.
So do you have that trend now? I know that Sanjeev, I used to work with Sanjeev in the same office as well. And Sanjeev will always update us with the trends. So as you
Yeah.
can see as what's been happening from the past month, Sanjeev, right? So that's the trend actually looks like it's regularly going down.
Yep, it will because there's again, yes, the interest rates are coming down, but at the same time, the unemployment rate is also going up. A lot of people are losing their jobs, so it's
Yeah.
not that the property market going to turn around overnight. It will take a bit of a time, but by the time a normal public will understand what's happening, the market would have gone up by 7-8% already. So
Mm,
that's why
that's
like
true.
staying ahead of the trend is good if you really want to make some money in property market or you want to pay off your mortgage faster. So you need to know where we're heading. Other than you're just going to be any other person paying off your mortgage for the next 30 years or renting.
Yes, that's true. And that's the reason why I think Sanjeev told me to just pass on to my all my details now.
Yeah, now's a good time because um, why it's best time because when as the interest rates are coming down, the banks are also dropping their test rates, so servicing test rates. So if you go back a month or about 2 months ago, they were although the banks were offering you 7% for 1 year, they were testing you at 9% at least.
Yeah.
So if you could afford a mortgage at 9%, then only they'll give you whatever you were asking for, which means your borrowing wasn't that great. But now most of the banks have reduced their servicing test rates. We're sitting at around 8 or 8.15, that sort of a window. So to give you an idea, an average couple's borrowing capacity would have now gone up by at least 5 to 7%. I was just doing some numbers for someone last week, just before the OCR announcement.
Mm-hmm.
Then we compared the same customer after the OCR announcement, when the
Mm-hmm.
banks dropped their servicing test rates. So all of a sudden, that young couple's borrowing power has gone up by $40,000 within one
Ooh.
day. So without any changes, so there's no increase in their borrowing, I mean, in their income and stuff. But because the banks dropped their test rates and the interest rates have gone down, so all of a sudden now they're getting extra 30, 45, 50,000.
Yeah.
So what's that going to do? Obviously, I've been in the game for a while. So when you get a pre-approval for a first home buyer, they will spend it all. right? Most of the time. So if I get someone a $700,000 approval, they start looking for properties in $800,000 budget, right? So you give someone a $1.5 million approval, they'll be like, oh, no, I want to buy $1.8 million worth of property.
Oh
So
my
they will go
God.
out and also more. The cheaper money will create more competition as well. So that's what happened in 2020, 2021. So yeah, so that's exactly what's going to happen going forward as well. But one thing people need to be aware of, don't just go crazy out there and then think like, oh yeah, don't get stuck in fear of missing out, because
Yes.
banks will also be bringing in debt to income ratios. So if you could afford, even if the interest rates go down to 4% tomorrow,
Mhm.
that doesn't mean your borrowing capacity going to go double, because going
Mm.
forward, banks will also bring in debt to income ratio. That's where your borrowing power will be limited to 6 or 7 times of your income. So that's where,
Mm.
at the moment, the investors are pretty good. So they're coming back in the market. So they won't feel anything just yet because the interest rate is still a
Yeah.
little bit high. But then once the rates go below 5%, then the DTI will really be impactful. So that's when people will feel, hey, I can easily afford this mortgage, but Reserve Bank have put this restriction in, so I can't afford it
Mm.
because the banks won't lend me more than 7 times of my income. But on paper, they can easily afford it.
Yeah. Oh, it is quite tricky. And that's the reason why I always tell our clients, at the instant Sanjeev, is that if they think that they're actually able to do it now, or like they've already have enough deposit, and then of course like they've cleared out their finances and everything, it's clean, just might as well just go into like getting some good advice from a broker, because then at least you won't actually wait for that time of the FOMO, the fear of missing out. Once it
Mm.
becomes a hot market again, everything will
Yeah.
sell like pancakes at a high price. So this is the
Yeah.
best time.
Oh, absolutely. Because let's say the interest rates are still high, and rather than waiting for another 0.5% decrease, if you buy something today, let's say you ended up paying extra $2,000-3,000 in a year in interest, but you might be saving $40,000-50,000 in a purchase price if you buy now.
Mm,
By the time the rates are down, the property values go up, you already are ahead of other people. So
yeah,
that's when, if you really want to buy, now is a good time.
that's
Um,
so true.
have
Ate.
you have you heard, Sanjeev, of the Wiri Hana offer? Uh,
Yeah, so there are a few others as well. So they are not the only ones. So to give you guys a little bit of a background, if your viewers don't know anything about it, so time to time when you buy a brand new house, some developers offer you a bit of a cash incentive. So they'll be like, hey, look, buy this house for 700, 800,000, whatever that is. And once you go unconditional, we'll give you a bit of a cash. It could
Mm,
be $10,000, it could be 20,000, 50,000, whatever that is. Some developers will offer you a free car or a free furniture package, which is pretty normal. So usually what happens, to give you an example, this Virihana development, I think what they're offering, $25,000. What is it?
yes, equivalent to $25,000, or you can opt to have your mortgage interest rate locked in for about 1.95%
Yes.
in one
Yeah.
year.
So
for 1 year only.
yeah, because these guys are just offering the incentive; they're not offering cash.
Uh,
So back in the days, I mean, if they are offering this much of incentives, that's good. Like take it, no issues with that. But most of the time, we encourage people to actually ask for a discount of that much money. So if they are offering you this
Mm,
house for say 700,000 and they're giving you $25,000 worth of a furniture package, I would rather take a $25,000 discount on a purchase price and then
mm,
do shopping so I can buy the same furniture for a little bit less, or I don't even need a
yeah,
brand new furniture, right? I can go to
yeah.
Facebook Marketplace and probably buy something for 5 grand. Don't need to spend 25. Or sometimes they offer you a brand new car worth $25,000. So probably don't need that car. I'm
Yeah.
happy with a $5,000 BMW, right? I don't
Mm.
want to spend $25,000 on a car. But then again, anything free is good. Take it. So to give you a bit of a background, so as developers were offering cash back to the buyers, banks will usually not take that in account. So if the developer is saying, I'll give you $10,000 back, the bank will then say, hey, look, the property is not worth this much. You should be actually asking them for $10,000 discount, right? So we're not going to calculate that as a deposit. But
Mm.
ANZ has just recently changed their rules. So what they're saying is, if a developer is offering you up to $10,000 as a cash contribution without
Mm-hmm.
any sort of clawback clauses, so you don't have to pay this cash back, then we will accept that as a deposit, right?
Mm.
So because back in the days when
Oops.
getting, can you hear me?
Sorry.
Yeah, you got cut off a little bit. That's okay. Now.
Okay, yeah, because oh, what's this flapping thing?
Oh, we actually have a question here from Ellen Bernardo. What about the investment property from developers? They're saying 8% return. Yeah, maybe she's asking about clarification on this particular thing.
Yeah, can we shut this thing off? What is this?
What did I
No.
mean? What your normal in our camera? Is it just
Okay.
on your phone, Sanjeev? You've got a laughing thing.
Okay. How do I do this thing? Okay. Anyway, because I'm hearing all these claps and stuff.
You turned on a filter.
Ah,
Oh, did I? Okay. How do I
But
turn
there's
this?
nothing on your camera in here, so you're still you.
yeah, the camera is still okay. It was just the sound. But seems like you're
So,
good now.
if someone is offering you something like 8% return, so be really careful with it. Do the numbers. Get a proper rental appraisal from another company. Don't just listen to what the developer is saying, because they might be saying, hey, look, we'll give you guarantee that you get 8% return for the next, say, 12 months or 2 years and stuff. But then later on, you find out, hey, that's actually not the market rent for the property. Yeah.
Where will you get the second opinion then? Who are you going to ask or
Just
to?
go to, there are so many other property management companies. So you just talk to a couple of people and say, hey, look, this is the property that we're looking to buy. Can you give me a market appraisal or the appraisal? Or you can go to this website called um, market rent. Just Google market rent. So they will take you to a government website. You put a suburb in, whatever suburb that property is, and then you pick and choose, hey, how many bedrooms, what sort of property that is, and it will give you a bracket. Hey, lower end is this, and the highest end is this. If there is
Mm.
more than 10% variance, then there's something fishy.
Yeah. And
Hey,
that's why it pays to actually really ask the experts before you actually dive into it.
mm,
Exactly. How do I turn this noise? Can you guys hear this clapping and stuff? I
No,
don't know
we
why I'm
don't.
like
no.
I'm just hearing some sort of a sound
Ah,
from my end.
interesting.
Can I
No,
just
we
log
don't
out
hear
and come
it.
back in?
Yeah, but I think
Yeah,
that
maybe go and then
try winning us back again. We'll wait for you. Don't worry.
Okay. Thank you.
Oh,
Okay,
that's
okay.
funny.
That's really
Okay, so
interesting.
oh yeah, that's actually true. So I just want to back up Sanjeev Ate with that. I'd rather every time I deal with my clients who are investors, I'd rather majority of them they have their own accountants, they have their own team, and
Oh,
that's the reason why you'd rather if you would want to start being an investor and someone saying that hey this is going to be an 8% return at the Ellen, I think I'd rather talk to a property manager, ask for an appraisal, and then you go over it with your accountant. So then you can see if it actually is an 8% return
so that's why we need an accountant as well if we're
as
having
well.
investment properties. Ah, you're back.
Yes.
Cool. Thank you. This is better because there was a bit of a
Yeah,
Yeah.
noise
that's
sound. I don't
the
know what
noise
that
is
was, but
also better. I think Yeah, the voice is
Okay,
also
that's good then. Yes, so if you
So
are,
Ellen said thanks.
yeah, no problem. So yeah, always get a independent advice. So just get the other property management companies to give you some sort of appraisal
good.
as well. And then you compare two or three, and then see where the difference is. Why all of a sudden this developer is saying this property will give you $800 a week rent, whereas every other property in the block is only getting 600. Right.
So
So
Yay.
be
let us
careful.
clarify the offers of these developers. Is it only for the new build? What about the existing builds? Old
Not
build?
existing, just the new build. So back in the days, people used to get up to $10,000 of a home start grant from the government, especially the first
Yeah.
home buyers, because that grant doesn't exist anymore. So ANZ
Mm.
just came back with this offers. Hey, look, some developers are genuinely trying to help the first home buyers to get onto the property ladder. In that case, we'll probably take up to $10,000 as a gift from the developer. So give you an
Developer.
example. Let's say you want to buy, I don't know, it doesn't have to be $1 million property. I'm just throwing this number because it's easy to calculate. So let's say you want to buy this $1 million worth of a property and you only got say $90,000 of a deposit. You are $10,000 short
Yeah.
because you don't have it. So developer is saying, hey, look, if you buy this property, once you go unconditional, I will give you $10,000 as a gift. Then all of a
Mm.
sudden, instead of 90,000, you have $100,000, which is 10% deposit. The bank will then accept it, and you get onto the property ladder, right? So that
This
ten
is
thousand
really
dollars,
a good offer.
yes, because that $10,000 from a developer can potentially increase your borrowing capacity by $90,000 because you're
Mm.
10x, right? So you can borrow 10 times of that.
And then this
Mm.
$10,000 is not only for first home buyers, it can be for any investors as well. Hey.
Pretty much, yes. It could be anyone because they haven't specified that it's limited um, to
Home
first
buyer,
buyers
first
only.
home.
Yeah, so it could be anyone
Mm.
as long as it's a genuine sort of a gift. It's not a furniture pack or it's not a car or
Mm.
Yeah.
a discount on an interest rate. That sort of offer. It has to be a cash offer.
So is it the
Ah.
same to all developers or only to particular ones?
No, anyone and everyone, right? So as long as it's a genuine intent, so they will be, they have to insert this clause on the sale and purchase agreement, and they will mention clearly that hey, we are genuinely gifting $10,000 if they go unconditional. So why developers do it? To give you an idea, so let's say I'm the developer and I'm building 10 houses in a block, right?
Mm.
And I might have sold some properties for $1 million each recently, but now all of a sudden I'm just feeling that I'm not able to get $1 million for the rest of the development. So let's say I built 10 houses, I sold five at 1 million, and I still have five, but
Mm.
the offers I'm getting are around 900,000, maybe 950. But
Mm.
I don't want to reduce the price because if I do reduce the price to 900, all the people who have bought from me just recently, then they will be annoyed. They will be like, hey, look,
Yeah.
why all of a sudden, like I paid you a million and within a few months you selling the same property for 900. So that's when they
Yeah.
come back with all sorts of options. So they'll be like, okay, I'd rather just give them the discount than reducing the purchase price. Okay, so that's how the developers do because they don't want the property values on the other properties to go down. So that's how they come up with the 10, 20, $50,000 for discount, I mean, cash offer.
So does that mean, Sanjeev, now that if we are talking to a bias, let's just say I'm back in real estate,
Yeah, you should.
and I'm talking, and I'm talking to a buyer, um, if that developer didn't really say that he's giving a cashback, something like that, or a gift, would that be also a chance of a buyer to actually negotiate and ask that?
Definitely, yes, do that. So multiple ways. Again, try to get a discount if you can. If you don't get a discount, or the deposit part is a bit tricky. But as I said, like
Mm.
that gift can actually increase your borrowing capacity
Yeah.
by quite a lot, right? So if that's crucial, then see if they can give you a bit of a gifting rather than discount.
Yeah.
But at the same
Yeah.
time, if there is a discount, then anything is better than nothing. So,
Yeah.
but people need to know that, hey, look, you don't just pay what the developer is asking for. So there is always a room for negotiation.
That's true.
Oh, talking about asking, I've just recently tried that with ANZ as well, because you know what I've mentioned, we'll be renewing. And I was like, let me ask if I can get a cashback. Is that what we call cashback?
Yeah.
Because you know we've been with ANZ since 2020, and the first cashback was when we get the house, and then we
Mhm.
didn't get another one. And so I asked for a cashback, and there's no harm in asking. Yep, they answered positively. So you got like 1,500.
There you
But then
go.
the
Yeah,
downside
see, again.
is
And if you
we
don't
have to
ask, the
stay.
answer is no.
Yeah,
Forget
yeah. I
it.
was ready for a no, but I was hoping for a yes, and it was a yes. The 1,500 is well a small amount, but at least there's something.
Oh,
And the
100%.
downside is like we gotta stay with them for another 3 years, and yeah, we're happy with them so far. So yeah,
Yeah, but then who knows? Like maybe you won't move to another bank because ANZ's rates are the cheapest at the moment. So,
yeah, yeah,
you know,
yeah. That's another thing
yes,
as
if you're
well.
staying there, and then again, that cashback that you got from them, it's on a pro rata basis. So let's say you only moved out after a year, you don't have to pay them $1,500. You only have to pay them $1,000 back, right? And if you moved out
Mm.
after 2 years, you only have to pay them $500 out of that. So
Yeah,
that's the money that will now stay in your pocket.
yeah, yeah. Thanks for mentioning that as well. Oh, we've got Ellen asking for your best time to connect with you.
Give
What
me
do
a
you
call, Ellen. Or just send me a text message or email, and then we'll book a time. So we're based in Manukau on Cavendish Drive. So if you want to see me in person, just come over to our office. Otherwise, just flick me a message or just call me.
Yep,
Yes, I
I'll.
think yeah, put Sanjeev's number in there. Yeah, and
Um,
what I love about Sanjeev as well, like when I always send out, even though I'm not in in the industry at the moment, I will actually always send out some of my other clients on his way. The reason behind that is because I've already tested, my working relationship with Sanjeev. They've got good feedback, so I just keep on sending. But definitely call Sanjeev after that. But another question, Sanjeev. It feels like everything is all positive with this, the gift of the developers and everything. Is there any cons in there, do you think?
The cons are again, I think it depends, right? Some people will take the advantage of it. There will be some dodgy deals happening as well, because the smart ones will figure out that, hey, look, if I instead of a instead of just giving them a little bit of discount, why not I give them an extra $10,000, and all of a sudden you can borrow extra 90,000 from the bank. So
Mm.
then in that case, some people will end up paying more than what they should have been paying for the property. So that's when it's really important to talk to a financial advisor as well, because there will be some dodgy deals out there. So those are the cons, because again, I'm not saying everyone is bad, but there will be some smart cookies out there who will figure out the maths, and they will be like, hey, look, you are offering us $800,000 for this house because you don't have a deposit, and the bank is only giving you this much lending. How about we give you $10,000 extra? You can probably go back to the bank, and maybe your borrowing will go up by $50,000 and give us 850,000 instead.
Oh my golly.
oh yeah.
Yeah,
Oh, that's
that
tough.
may happen again. That's when the banks are really careful as well, because banks will ask you for a registered valuation report.
Yeah,
Mm.
they
So
do.
whatever property you're buying, if you have less than 20% deposit, the banks will ask you for a registered valuation report.
Mm.
um, then the valuer will go to the property. They will compare the same property with the five similar properties in the area that were recently sold, to make sure the
Mhm.
price you're paying is actually worth it. So
And in connection with that, Sanjeev, again, I think a lot of people are still not really getting around with the deposit that a buyer should have. So again, um like as of the moment, as of now, what percentage is the deposit that a first home buyer should have? that they can
Look, it
borrow?
just depends on the scenario. So usually banks ask for 20%, but if you're a first-time buyer, you can buy with 10%, or if you fit in the Kayanga or a first home loan criteria, you can buy with even as low as 5% deposit. So that developer gift can be really handy for some people who have only got very, very low deposit.
Mm-hmm.
So, if they have less than 10% deposit, then yeah, all of a sudden that 10,000 can make or break the deal. But
Mm-hmm.
said, like, if you fit in the Kayang or a home loan product, which is, I'll
Mm-hmm.
just repeat it again. Basically, you have been in the same job for at least 12 months. Your combined
Mm-hmm.
household income, you and your husband or partner's income, is $150,000 in the last 12 months or less, and you have a minimum 5% deposit, you fit in the Kayanga or first home loan criteria. The benefit
Mm-hmm.
that is, obviously, you don't need to save 10% deposit, which will take you a while. And at the same time, the interest rates you're going to get from the bank will also be same interest rates as you have a 20% deposit. So you get discount on
Oh.
interest rates as well. So that's really handy. We are doing a lot of those at the moment, because the way the market is, you don't want to wait until another
Yeah,
year or two, and by the time you'll have enough deposit, the market would have gone up $100,000. So
that's
I'd
true.
rather just put 5% deposit, and if I can, then get the property now.
Yeah.
Okay. And then question as well, because I have,
Mm.
even though I'm not in the industry, I'm still having some clients.
Yes.
So I have some people who are actually buying as a second home. So that's going to be an investor. So how much deposit that an investor would need to have?
If you're buying a brand new house, then you only need 20% deposit.
Oh,
Mm-hmm.
Anything existing, you need a 30% deposit.
Okay.
Not so long ago, like about a couple of months ago, you would need a 35% deposit, but now they've dropped it down to 30%.
okay.
That is good. Yeah, and hopefully, maybe in the near future, you might see the Reserve Bank dropping that requirement even further. So you might only need 25% down the line. Who knows? But
Oh,
at the
yeah.
moment, 30%. Yeah.
Oh, thanks so
Yes,
much.
Ashley.
Great. Because I thought it's just 35 and now it has gone down. Great. But I don't know if we qualify now for the next home.
Yeah, because deposit is not the only thing. You got to be worried about the serviceability as well, because you need to prove to the bank that you can afford the lending,
Yeah.
right? Yeah.
Repayments. You should be
Yeah,
paying
so
for.
we had a couple of big known bank lenders who have now left New Zealand market. So
Mm-hmm.
Resin and Bluestone, so they were doing up to 80%, even if you were buying an existing house. So you could borrow up to 80%, or you need 20% deposit for existing properties. But they have actually left the country, so they're not doing any lending anymore, because New Zealand is very small market for them.
Oh, that's quite
Yeah,
sad.
but at the moment, most lenders, you need at least 30% deposit for existing house as an investment, or as low as 10% deposit if you're buying a brand new house as an investment.
Oh, okay.
That's actually quite a good information out there, because I have had met someone, and then unfortunately I'm not in real estate, but I can direct you to
Yeah.
someone that I trust,
Yeah.
but at the end of the day, at least the people who are watching at the moment right now who has the same question, Sanjeev just answered that question. So you can get as low as 10%, and just contact Sanjeev if they want to learn more, because at the end of the day, Sanjeev, right, it's going to be in a case to case basis, depending on their situation. If they actually paid, I don't know, 50%, 60% of their existing home now, maybe they can use a bit of the equity. Is that correct?
Absolutely. Yep. So if you have a bit of equity sitting in your property, don't waste it. Probably put it to work, because the biggest mistake people make. Some people have a lot of, like, decent income; they can easily afford the mortgage, but the whole focus is to just pay off their home.
Mm,
Um, you talk to them, say, hey, look, you got this $1 million worth of a property, you only got $500,000 mortgage left. You can easily afford another investment property based on the equity in the property. Why don't you do it? And their
Yeah.
answer will be, oh, because I just want to be mortgage free first, and then I'll focus on. the investment property. But that's the biggest mistake people make. The
Mm.
problem with that is, yes, you focus on paying that $500,000 in the next, say, 15 years or so. Yes, you might have saved extra, I don't know, $50,000, $100,000 in interest. But the problem is, if you would have invested that money into an investment property, now
Mhm.
your investment property would have also gone double in value by the time, because you're
Yeah.
missing out on all that capital gains, right? So if your $1 million property today is worth, say, $2 million in 15 years time, at the same time, if you would have bought another $1 million property as an
Yeah.
investment, that would also go up by $1 million, right? So rather
Yeah.
than you just focusing on saving, say, 50,000 or $100,000, why don't you focus on making an extra $1 million on a capital gain,
That's true.
right? So that's the biggest mistake
Yes.
people do make.
That is so true. It's just so hard to explain that to a lot of people. I always say that you have the capacity to buy the second one. And at the end of the day, it's an investment. You're gonna put someone in there, tenanted property. It's pretty much, even if you pay a little bit extra on the, on that mortgage, you're still owning two properties and it's paying at least 50% of it on its own, you
Look,
know.
it has to be affordable. Again, not every property is a good property, because you probably, I don't know, like if you're trying to buy something in Auckland, it's 99% chances that you have to top up that mortgage from your own pocket. But at the same time, you do have other options, such as like you go into the regions, like go on Rotorua, go Hawke's Bay, somewhere in
Mm.
South Island, right? So maybe you are still topping up the mortgage, but not as much. Maybe a little bit, like $50 to $100 from a week from your own pocket. Whereas in Auckland, it might cost you extra $400, $500 a week
Yeah.
from your pocket, right? But that's, again, it's pros and cons. So that's when you need to sit down with the financial advisor and work out the numbers, rather than just going
Mm.
directly to the bank, because bank's not going to give you any idea. They will tell you, hey, look, you can afford this much of a loan, but they will not tell you how much are you putting from your own pocket, whether or not it's a good investment for you, right? So they
Mm,
won't,
That's
okay.
won't
so
do that
true.
with you. Again, even if you are losing a little bit of money, but if you have the means to pay it, I take it this way. Let's say you're putting $10,000 a year from your own pocket, right, to top up that mortgage,
Ye-
but that property is going up by $50,000 a year. You're not losing anything, right?
Yeah.
You're still
That's
tripling your, or four times your money
yeah.
every year, if that's the case. But property market does go up, but it doesn't go up all the time. So be,
Yeah.
be careful with the timing. It's a long-term game. It's like, if you're buying an investment property,
Mhm.
think about 10 to 15 years sort of a window, not just like, you're going to make a money every year.
I do agree. We have another question from Ellen. If my daughter wants to buy a house, can we gift portion of our Kiwi saver?
No, unless you are 65 years old. Uh, because
Oh,
KiwiSaver is for your retirement, or to buy your first home, or you can use it for hardship. You can't gift KiwiSaver to someone unless you are eligible to draw it down.
so you're saying you
Mm.
retire first, get your money, and you gift it to anyone you want.
Yeah, so if yeah, once you turn 65, you can cash it out, right? So you do whatever with it. You can go to casino and gamble with it.
Enjoy your money. Yeah. I don't know what
Yeah,
is it in a
I've
year
seen
60.
those things. I've seen people doing that.
Oh my golly, that's so bad. Oh
Oh,
wow,
Yeah,
that's
but
actually a good question. Yeah.
there are other options as well. Like if you have a bit of equity in your property, you can
yeah.
basically become a limited guarantor for your daughter. I'll give you a scenario how it works. So let's say your daughter wants to buy $800,000 worth of a house. She's only got $100,000 deposit. Um, to make it to 20%, she needs 160,000. Okay, um,
Mm.
because she's short by, or let's say she's only got $80,000 deposit, right? She's short by $80,000 to make up 20%.
Another.
Now you can become a limited guarantor for her. So your guarantee is only limited to $80,000. Okay, she will be able to afford. I mean, if she can afford $720,000 of a mortgage, if the house is worth 800, the bank will lend her all of it, or even 100%, right? as long as she can afford all of it by herself. But your guarantee is only limited to whatever amount of deposit she
Um,
required. It could be $50,000, it could be $200,000. So if you're putting your house against her loan, you only have to pay whatever you're guaranteed for. You don't. It's not that if she defaults on $1 million mortgage, the bank gonna take your house. No. So the bank will make sure you can afford the guaranteed portion plus your existing mortgage based on
mm,
your current income. If you can,
mm.
then only they will let you do it. But at the same time, the bank wants to make sure that your daughter can also afford all of the lending by herself or with her partner.
It's true.
Cool. But that's a really good way as well. So if you go towards central suburbs, like all the European people, like the rich ones, and that's how they help their kids to get onto the property later.
Yeah.
Yeah, so you go Ramira, you can go to Green Lane. There's no way those guys can afford that much of a deposit. Otherwise, it's the money or equity in their parents' properties. And I've done a lot
It's
of those.
true.
Yeah.
And
Mm,
just to clarify, everyone, I know that you cannot be also a guarantor if you're not working. So the person that is guaranteeing, right, Sanjeev, you have to have a
Yeah.
serviceability as well.
100%. So the bank will only let you become a guarantor if you can afford that loan. So let's say your
Mm,
current mortgage is 500,000, and you want to be guarantor for another $100,000 for someone else. Then the bank want to make sure you can afford the current mortgage plus another $100,000 if the
mm,
other person defaults, right? Because they
mm,
don't want
yeah,
to just take your house and then put it in a mortgagee sale. They want to make
yeah.
sure if the other person defaults, you can at least pay that $100,000 and save your house.
okay.
Yes,
Good.
that's correct.
Good to know. Right.
Okay.
That's it.
I
Wow,
actually,
fantastic. We're really happy with the insights that you're giving us. Oh, not just the time. Of course, your time is very precious. Your insights as well very precious. We are looking forward to hearing more updates because everything is changing every now and then later on. So maybe join us again next time. Thanks so much, Sanjeev.
yes, once you have more any other updates, Sanjeev, reach out to me and Ate. We will be we would love to actually be the channel, channel for you to tell everyone what's happening and what's been going on. And also, of course, just wanted to let you know, guys, just contact Sanjeev, the number that Ate has like kind of put earlier. If you've got any other question, call Sanjeev because it's a case basis. Everything that we've talked about tonight is going to be different from what you are right now, your situation right now. So make sure to call Sanjeev, book in an appointment, and talk to him. Yes.
Cool. Thank you, guys.
Thanks, Sanjeev. Thank you so much. See you again.
There you go. Wow.
I've
Oh,
learned a lot with that. See, I actually forgot a lot of things, and that's very, very awesome that Sanjeev
I
was
won't
there,
forget
Ate.
the 30% for an investor because I myself, I'm not a first home buyer anymore. I will be considered an investor. So from 40, I've been keeping an eye on that one. And then last time Sanjeev said it's 35. Now it's down to
It's
30. And
30.
we're hoping it's going to go down further to 25. And hopefully by that time, I have enough equity to use my house, just like what Sanjeev has been saying.
But remember, Ate, he
Yeah.
also said that if it's a new build, then you can give up to 10% deposit
Oh, I
for an
missed that one. Oh,
investment.
good, good for mentioning that again.
Remember
Hmm.
that? So you just talk to Sanjeev, Ate, or
Yeah.
anyone, like if you're working with your bank, then that's good as well. But I think what I liked about working with a mortgage broker is that because they've met so many cases, so
Yeah,
many,
yeah.
and they've got
Different
all these
banks.
ideas. Yes, and Sanjeev has been in the industry for quite a while, worked in the bank for quite a while as well. So he knows a lot of people from all the major banks.
Hey, what about you? When are you going to talk to Sanjeev?
Actually, Sanjeev already told me last week because I told him what we have. I told him how much we have right now as well as an income. And he was like, definitely send all your papers.
There you go. Because I was supposed to ask him if he is expecting that the house prices will go up anytime soon. Well, I'm
It
excited.
usually takes a little bit. So if now ate, because I can see with my colleagues in Ray White, in Buffett, and the other brands, Harcourts, everyone, I seen an upgrade of, the property selling, and it's
Mm.
much quicker now. So it means
Oh,
there's a lot of activity now happening in the real
that's
estate
that's so.
world. Yeah, so that's when it starts, especially the demand will be higher once the interest rates, because that's what Sanjeev said out there, right? Like the trend is just continuously going down, then it follows, the prices will soon. So this is the best time to do it. And imagine at there, remember how it sometimes it takes like at least, I'm not a financial advisor, I'm not, an economist, but usually it takes a little bit of time, another like maybe couple of years to have it lower. If you buy now, it just continue going lower, and then you're paying that much in the coming five,
Mm.
let's just say 5 years, then you're good within the coming 5 years if you buy now.
This is what really excites me about our podcast, that we keep ourselves updated of the current trends, plus the fact that we are learning from the experts that we are tapping as well. And it makes me feel like, ooh, I'm manifesting my next home and my next home.
Yes.
Your first one, your one first soon.
I know. I can't wait. I pray for it. Me and my husband and my kids are devotion having devotions for it. So we
Oh,
continue to
that's
pray.
cute.
Yeah, so we continue to pray, because at least I would of course would love to welcome people who needs my, my support and advice, not just in here, ate, like yeah, I that's my deal with Papa God. Like if you just give it to me, I'll be open to the people that needs my help.
Yep. And you've been doing that already through our podcast here. You're sharing your insights, your ideas, your experiences. And that is more valuable than the money you can give to people, because that's everlasting. The ideas that you give can grow.
Yes.
Yeah. So
And
there you go,
I
everyone.
would, it's just a full year now, and I'm just so thankful. I just want to say that I know that this is not our last episode for the whole 52 weeks. This is
Yeah.
the 51st week. But I'm just very grateful with you, Ate. Being able to be my co-host in this one, and we've kept it up for a whole year, and everyone is
Yeah.
watching us. So I'm so
And
happy.
same with me. I'm
Thank
so thankful that you're there, because you also give me a lot of ideas, and the collaboration that we're doing, it's fantastic. So I really hope everyone is learning a lot from our podcast. 51 weeks. We're turning 52 and more to go, because we are not stopping with our first home. We are going to be investors. So join us, grow yourself with others, grow yourself with us, and we'll grow ourselves together. See you next time, Paul. And by the way, announcement encouraging
Yes.
everyone for Pistang Filipino in October 26 to 27.
Oh,
Yeah.
I'm not gonna be here. Where is that, Ate?
Takanini. Bruce Ingan Takanini. So there will be a lot of Filipinos from different parts of the world because of the mobile consular. Grab that chance to process your, what do you call this, passport or birth certificates or whatever that you need to process with the Philippine embassy, because they're coming over. And yeah, we'll see you there, because I'll be there too, selling
Oh.
our food, or Filipino food, Filipino delicacies. So
Yeah.
hopefully you're available.
Ate, that reminded me. I might need to message you. I actually am looking for someone that I can order food for my birthday for our Bible group.
Oh yeah, just let me know. I'm not the one cooking. I'm just selling.
Yes.
All right,
Yeah,
thanks
I'll
so
let
much.
you know. I'll do it privately, not here.
Yeah, yeah, yeah. Don't do it. Have a good
Thank you,
night.
Ate.
Bye.
Bye. Bye, guys.